morning, ladies and gentlemen. Welcome to Tuesday's market. SITREP here at Top Gun Options. My name is Matthew Buckley. My call sign is Wiz, and futures are pointing significantly higher this morning on what? Hopes of a trade deal. Yay. Love markets that go up on hope, right? We're going to dig into why the markets have hope. But good article. I'm not a big reader of the Atlantic, but good article about the coming Middle East conflagration. It is... it's getting ugly. Israel is they're out on their own, folks. I mean, they're close allies of the United States, but they do what is best for Israel. God love them. Even if AOC and the Squad and a bunch of other anti-Semites in the United States, would rather have us act differently towards Israel. But they're getting ready for war with Iran and Iranian proxies and the Houthi rebels down there in Yemen or up in Syria. As Tehran escalates its provocations on the anniversary of the 1979 seizing of our hostages, our embassy. It's pretty funny, all the liberals in the media, the way they worded that yesterday. The 1979 embassy seizure. So they just took a building. Yay, who would care about them just taking a building? Oh, there was American hostages and diplomats and Marines that were. How about, you put that in the headline? Seize the embassy. How about they kidnapped our people? But anyway, what's the United States going to do if conflict, not if, that's a stupid headline. That's the Atlantic for you. If conflict arises. Conflict's coming, folks. Iran said they have this uber awesome centrifuge now that's going to enrich uranium or heavy water, whatever the hell, the photosynthesis is, to build a nuke. This is a country that screams death to America, death to Israel on a daily basis. This is a country that says when, not if, we get a nuke, we're going to kill all of you. What are we doing? China trade deal, that's what's important. Yeah, okay. The market only cares when it cares. And when this comes to a head, which it will, it's going to be ugly. What are we going to do? U.S. China, here we go. So here's why the futures are roaring higher. Let me preface this with, folks, this is all algos. These are all algo movements in the market right now. If you're using a brain like we do here at Top Gun Options, this is all bullshit. Especially, well, let me just brief you on what happened first last night. The Chinese PMI, I told you, came out Monday night, 51.3. Looking for a slight increase in their services PMI, and it imploded, closer to recession. So you're telling me that, like, for example, the FXI is up. We have a primary live trade brief at 10 o'clock this morning. We're going to review. I have a bad FXI position that's getting blown out of the water right now. FXI is up on all this great trade deal news headlines. What? Okay, well, let's dig into it. Let's, like I said, the algos are trading the headlines, but we trade with our brains. U.S.-China consider rolling back tariffs as part of initial trade deal. We've agreed in principle to the first several phases of an agreement to end the trade war. So that's why we're seeing the market at record highs right here. Z zeroes in on Trump trade deal as China acts to steady markets. The PBOC, what are they doing? Symbolic cut in bank liquidity on Tuesday. And what happens? The invisible hand of the PBOC, which has kept the FXI up here, is keeping it up here even more. We've seen what happens when banks, central banks, get markets hooked on liquidity. When they pull that liquidity away, it gets ugly. But let's talk about what the Global Times has said. This is the mouthpiece, folks, just like the South China Morning Post headlines I was telling you about yesterday. And so the Global Times editor kind of, this is this guy. I don't think it's a guy. I think it's actually just a mouthpiece. Based on what I know, Beijing will insist that the U.S. proportionally remove existing additional tariffs simultaneously with China. The U.S. keeping all tariffs, only suspending a new tariff threat, the December 15 ones, in exchange for major concessions from China. China won't accept such a phase one deal. Folks, I've reported this for a week and a half. The algos and the financial media are ignoring what the Chinese are saying. They're saying you have to remove all existing tariffs. So, the markets are screaming, risk on today, rally, Trump trade is great. Well, Donald Trump or Peter Navarro, they're again, they've shifted, right? The president has, for the past 20 months, said no partial trade deals, and now he's open to a partial trade deal. He's also said what? Especially in the art of the deal. What is, you know, China? I've read hundreds of books about China over the decades. I know the Chinese. I made a lot of money with Chinese. I understand the Chinese. You know what he's also said in that book? The worst thing you can possibly do in a deal is seem desperate to make it. That makes the other guy smell blood, and you're dead. So this whole, he has said consistently that he's not going to cut tariffs. They need to make a deal that this and that. So I don't know. So let me just say this: the you know the market can remain irrational longer and you can stay solvent. This rip your face off rally on trade deal and optimism hopes. What usually happens when there's a buy on the rumor, fill in the blank, there's a sell on the news. Any trade deal we get with China, folks, is not going to be worth the paper it's printed on. These signatures will go down in history as a joke. The Chinese will do nothing to stop financing their companies. They're going to do nothing to stop stealing our intellectual property. You think the Chinese are just going to start making their own joint strike fighter submarines or whatever, or financial system, and stop stealing everything that we make? What are you kidding me? Google, for Christ's sake, works for the People's Liberation Army. So I get it. So here's the deal. I mean, I have to eject out of this bearish FXI. I'm in a 40, 41 and a half, 42. I put it, God forbid, I put it right up here at resistance, resistance, resistance. The problem with putting bearish trades on at resistance levels is, boom, they can get blown out on good news. Is this good news? Of course, I guess it's good news if you're an algo. If you're a guy like me and you listen to the actual words, if the president, and at 10 o'clock, we're going to talk about this. We might buy some long calls out to November here on to FXI because it's just time to join the crowd here of, hey, the market's going to rise on hopes of a trade deal. If we get one, maybe we get another little pop, and then what? Okay, and then do we keep ripping higher? Man, trees don't grow to the sky here, folks. This thing's got to take a break. But stepping. One of the wisdoms I constantly brief my members on is what? When something's on a tear, that's a tear. When something's on a tear, either join it or get out of the way. Join it by doing what? Bullish trades, or get out of the way, meaning, hey, man, sit on your hands. Cash is a position, and no trade is a trade. We have other good trades we're going to review today from our primary live trade brief. We had a bear call spread on Brazil that expired for $2,600, and we have a position on UTX, a bull put spread on our defense stock. Look at this thing, man. Since we put it on after earnings. Whew. That thing is on a monster run, and it's not going to up 6%. So that bull put spread is up $1,600. So the EWZ and UTX trades take out the pain of this FXI loss. So essentially a scratch from last week's primary live trade brief, maybe a little bit more. I don't know. So it's at 15. That's third. Yeah, no, total net probably $1,000 between these three trades loss. Okay, so we don't have 1,000% winning trades here. Nobody does, and I certainly did not expect another FXI pop on bad on their PMI contracting. But folks, again, listen to their words, right? The Global Times and a bunch of other folks on the Chinese side are saying first of all, we don't know what a phase one trade deal is. We're not using names of anything. Anything we sign is the deal. And if we are doing a deal, you need to cut off the tariffs. So we need to, this guy's Twitter feed has been quiet today about this stuff. And I know Peter Navarro is a China hawk. He will not support removing any tariffs until they do everything, until they sign everything. That's the hallmark of this administration, folks. Look at North Korea and Iran. Hey, you got to remove all the sanctions on us, man. We're starving, or we're going to keep shooting bottle rockets. No, you need to stop shooting bottle rockets, and then we'll remove the sanctions. Iran, you need to remove sanctions, especially the oil, or we're going to, keep enriching. No, you have to stop enriching. So we are we don't negotiate with terrorists type of country. If the president gives here, folks, let me put a point on this. If the president gives on this, you know what? Let's roll back some tariffs. Let's, roll back, delete the word tariff and insert the word sanction, right? So if we roll back tariffs on China for trade, do you not think, especially these three stooges together, China, North Korea, and Iran, they all kind of swim in the same pool, folks. Iran and North Korea are going to take that as a sign of weakness, and China will too. So this is getting very interesting. So trade the market you have, not the one you want. With the market was actually up yesterday, and the VIX was up yesterday. That's market up, VIX up, something's up. There's a lot of people. Already did a couple conference calls this morning. There's a lot. Nobody I know is getting bullish up here, folks. A lot of people are already saying that, hey man, this rip your face off rally on potential on optimism. Markets that rally on optimism crash on reality. And I don't use the word crash like the thing's going to implode here, but this thing's going to take a break. And until it does, sometimes it's better to sit on your hands. Okay, but we'll debrief all this stuff in about 33 minutes at 10 a.m. in our primary live trade brief. We'll talk about the FXI trade and getting out of it, and then the invisible hand of the PBOC is back in. Adding liquidity to markets, as you can see on Bloomberg right there. The PBOC cutting bank liquidity, and they're pumping money into their market. They're going QE, folks, but this extended period of low volatility will end. I hate sounding like the crazy guy on the exit ramp of I-95 down the street here. The end is near. The guy's going to be right one day, but this is nuts. And we're going to see a serious uptick in volatility on something, because volatility does not stay down here forever. Okay? All right, I got to get going. I'll see you guys in the primary live trade brief in 32 minutes. God bless.